What's up, everybody? Today we are going to be talking about Adobe. They released earnings not that long ago, and the stock price has been cut in half over the past 4 years. If you bought at the peak in 2021, you are still down about 50% on your money today. Over the long run, of course, Adobe has still been a major winner. And I feel like I have a bit of insight here. I've used Adobe products for over 15 years. I ran a small media production company in LA. I've used Premiere, Photoshop, After Effects for just about forever. So from the customer side of things, I have certainly given a lot of money to Adobe. I know their products very well. We'll take a look at the stock. We'll see if it offers an opportunity for us today, see what we can expect for a return on our investment if we buy in. And as always, if you get value out of the video, subscribe to the channel. If you want to know how to get my Google Sheets template, very soon I'm going to be launching a Patreon. I'm just waiting for Google to approve my custom add-on that I've built that allows me to do things like put a ticker in here like Adobe and then hit load, and my sheet will just auto-generate this nice little price graph here, and we'll pull in a bunch of fundamental information. We see if we click in these cells, I'm using my own custom function, DBH, which won't exist by default in Google Sheets, but if you install my add-on, then you can use it to bring in fundamental data about a whole bunch of companies. In any case, if my add-on gets approved, I will let you all know on here, and I will launch a Patreon where you can download these sheets. Now, let's jump into Adobe stock. And the first thing we notice when we just look at the revenue, the history of this company, it was kind of stagnant, and then it really just took off in 2015. It's basically just been going straight up since then. You might be wondering what changed around 2015, and the answer is they basically completely changed their pricing model for their products. Prior to this point, if you wanted to buy Photoshop, you wanted to buy Premiere, Illustrator, something like that, you would pay a one-time price and you would own that piece of software. And they were really expensive. I mean, I think you were paying $600 or $700, I seem to remember, for something like Photoshop. The upgrades were cheaper, maybe like $200 or $300 to upgrade your version of Photoshop. Then in 2013, or maybe it was like right at the end of 2012, they came out with Creative Cloud. This was their subscription model. You pay a price for a month and you get Premiere, or you can get a bundle where you get Premiere, Photoshop, everything. And there was this period of a few years where, some people had CS5 or CS6 and some people were using Creative Cloud. The last version of Creative Studio that came out that you could actually buy was in 2013, and that was CS6. I still know some people that use CS6 to this day that are using, a 12-year-old piece of software simply because they never wanted to switch over to Creative Cloud. They're a very, very small minority. You cannot work without Creative Cloud nowadays. And the super annoying thing that Adobe did, annoying for a customer, for a client, I understand why they did it as a business, but the annoying thing they did is they removed backwards compatibility on their software. So previously, if I had CS5 and I was working with an editor who had CS6, then I could send them a Premiere file, they could open my CS5 file in CS6, and if they made some edits and sent it back to me, I could open their CS6 file back into CS5. That's backwards compatibility. But no, what Adobe did around 2013, 2014, when Creative Cloud was picking up and when they decided to fully make the switch over to a subscription model, they said no backwards compatibility. If you are working with someone who uses Premiere CC, Creative Cloud in any way, you cannot open those projects in CS5, in CS6 anymore. It was pretty frustrating from a customer standpoint at that time. Essentially, what they did is they forced all the professionals to get on Creative Cloud. If you wanted to collaborate, if you wanted to send files back and forth, you all had to have Creative Cloud. At the same time, for hobbyists, a monthly subscription to Creative Cloud seemed more palatable than the massive price tag that you would have to pay for Photoshop or, pretty much any of these Adobe products. And by the way, I probably should mention, around this time, Adobe was also suffering significantly from piracy. I know tons of people who had cracks of CS5. It was being shared around on flash drives all over LA during this time. That was money that Adobe was missing out on. And once they switched over to Creative Cloud, the piracy issue pretty much went away. From a business standpoint, you can tell that the subscription model has clearly been the right choice for Adobe. And at the same time, Premiere has taken over market share in the video market. Back over a decade ago, there were a bunch of people who were using Final Cut. If you were a hobbyist, Avid was very popular in Hollywood. But when Final Cut switched over to Final Cut X, in my circle of kind of video hobbyist friends, that was pretty much the nail in the coffin. No one wanted to use Final Cut X. People switched over to Premiere. They made it very easy to make the switch. Even in Hollywood, the market share of Avid has declined significantly over the past decade. There are tons of professional projects that are edited in Premiere. Adobe's products are, for the most part, the gold standard in media. You can't be a photographer and not have Photoshop. It's not a thing. Looking at the suite of Creative Cloud products, Premiere, still the gold standard. There are competitors. I mean, you can edit videos without Premiere, but if you're a professional, it's very difficult not to have Premiere. You basically can't collaborate with people because most people use Premiere. Illustrator, the gold standard for design. After Effects. After Effects is really a product where there isn't an alternative. If you want to do visual effects work, you basically need to have After Effects. There's other programs that can do things like 3D modeling, stuff like that, but if you are doing real VFX work, you need After Effects. It has a pretty steep learning curve, but once you get used to After Effects, it is incredibly powerful, and again, there really isn't an alternative. Now, maybe it's about time we look at some of their numbers. They did just come out with their Q3 results. I'm actually just going to use their Q1 presentation because I think it's presented in a better way. We'll, of course, look at the Q3 numbers as well. Revenue has grown very steadily, 10% growth, or constant currency, 11% growth on the top line. Now, top line growth has come down a bit, more like 5 years ago. We were looking at, 20-ish% growth on the top line. Still pretty solid. And the digital media segment, that's what I've been talking about mostly. That's Creative Cloud. Creative Cloud is right in here. This is the majority of the company. This is 75% of revenue. And of this hunk, most of it is Creative Cloud. So about 80% of that is Creative Cloud. The rest is from documents. So that's like Acrobat. If you don't know, Adobe invented the PDF format. You basically had to use Acrobat if you wanted to create or edit PDFs. Now it's an open standard. So, they don't really have a monopoly there. Still, Acrobat and documents is like, about 20% of digital media revenue. Digital experiences, we haven't really talked about because I've been rambling so much about the media side of things. For digital experiences, the clients aren't consumers. They are businesses. They run marketing campaigns, online stores, provide analytics to companies. It's a smaller segment than media, but still important. Most of this side of the business as well is subscription revenue. Having such a high percentage of revenue and earnings being from subscriptions makes their cash flow, makes their earnings very predictable. They always have a high amount of future contracts, future subscription payments coming in that they have not recognized as revenue yet. Right now, that's sitting at just over $20 billion. Again, this is Q1, so that's why it says, 19.69 billion here. But most recent quarter, this is up to about 20.5 billion. And as far as earnings for the overall year, they're now guiding for $16.50 in earnings per share. That is up a bit compared to what they were saying in this Q1 presentation. Relative to their stock price today, that's like 21, 22 times earnings. On a forward basis, you're probably talking, just under 20 times earnings. So it's not that expensive. It's not dirt cheap. I mean, for a company with its competitive position, incredible operating margins, incredible return on invested capital, it's really not that expensive. But, I have heard some people say that Adobe's trading for like 15 times earnings or something like that. Keep in mind, they pay out a large amount in share-based compensation. So if you are looking at their non-GAAP numbers that they report here, where they're saying, over $20 in earnings per share, this is not taking into account their share-based compensation. So essentially, if we don't expense out a ton of the money that we pay to our employees in equity, then yeah, of course, our earnings look better. And you could say that we are trading for, 15, 16 times forward earnings. But if we buy the stock, if we are equity owners, share-based compensation, this is a real expense to us. And currently, this is almost $2 billion a year. I always adjust free cash flow of companies for this number. So for me, I'm looking at a company with a little over 5% free cash flow yield at today's prices. I wouldn't call it dirt cheap, but I don't think it's that expensive for how strong the company is. It's really difficult for me, as someone who's worked in media for many years, to imagine Adobe not being a market leader for, many more years to come. But this is the reason why the stock has sold off a lot, I think, is because people are saying, AI is going to eat Adobe's lunch. And there's all these AI tools for video generation, photo generation that are going to outperform Adobe. Now, I still use Adobe products all the time. I would say I'm pretty familiar with how their product stacks up to their competitors in the marketplace. And I would say in terms of just pure Gen AI tools, Adobe is not the leader. I think if you're talking about text to video, Google has a better model. If you're talking about video to video, where you give it an input video and you say, hey, I like this video, but maybe change the subject so they're wearing this kind of shirt, or make the background kind of different. Adobe is not the leader there. They've made progress. This is Firefly. This is their text to image thing. So I just gave it a prompt. I said, a lone figure standing at the edge of a canyon, holding a glowing compass, canyon walls are carved with subtle stock charts and financial symbols, with golden light rays illuminating the words Deep Value Hunter engraved in the rock face. It did okay. It didn't exactly get what I was going for in a bunch of these images. This one's probably the best one here, I would say. But still, I would say this output is just okay. Their text-to-image model, also not the best. So basically, in my opinion, I think Adobe's pure Gen AI tools, it's kind of meh. Where they excel is how they integrate tools into their software. For example, in Premiere right now, you can use generative expand. If you want to expand a clip to just get a few more seconds of footage that maybe you didn't capture on set, you can now do that in Premiere, and it works quite well. A bunch of other places like, Midjourney, they might have a better text-to-image model than Adobe, but still, if you want to edit a photo, you use Photoshop. Figma has some really cool design tools, so they have competition there. It's hard for me as a media person to consider Canva a competitor to Adobe. Maybe because it's so much cheaper, it might cut into market share in the future. I'm not sure, but the product is not nearly as powerful as the stuff that Adobe offers. So overall, I think that there is some reason to have concern for these Gen AI tools, but I think as far as software is concerned, Adobe will remain the leader. Now, let's see what we might be able to expect for a return on our investment if we buy Adobe stock today. I think in my base case, it is still reasonable to expect revenue to grow roughly 10% on the top line. This is pretty close to what they're doing now, and I'm giving them a 34% operating margin, which is an excellent margin. Adobe's margins have actually been going up over time. The marginal cost to them when one more person signs up to Creative Cloud is effectively zero. So as the company has scaled up, margins have improved as well. They're buying back a significant amount of stock right now, this free cash flow margin right here. This represents a dollar amount that I think it's reasonable for us to expect the company to return to us shareholders. And as far as a multiple, I'm giving them an 18 times multiple on operating income. I think that's reasonable. You could be a bit more optimistic. You could give them a better multiple. They've traded for a higher multiple in the past. If you give them a 20 times multiple, you're essentially looking at a double on this stock over 5 years. As far as a bear case, revenue has been slowing down. So if we assume revenue decelerates more to, maybe a 7% growth on the top line, margins pull back slightly as they have to compete on pricing for AI tools. So maybe 32% margins, and I'll bring down free cash flow. And if we just give them, a 14 times multiple, which I think would be fair in this scenario, you're looking at, 3% growth on your money. That's not too bad as far as a bear scenario goes. And by the way, while we're talking about, them potentially lowering margins, I meant to mention this earlier, but if you have Creative Cloud, this is actually something that, is maybe preventing me from investing in Adobe right now. If you want to get out of your Creative Cloud subscription, if you try to cancel, they say, are you really sure that you want to cancel? Hey, we'll give you a couple months for free. And if you say, I don't want the couple months, I just want to cancel my subscription, they'll offer you a significantly reduced price a lot of times. They've been doing this for over a year. I'm surprised more people actually don't talk about it. I mean, you have to go through a bunch of windows on the Adobe screen before it gives you this. But this makes me think that Adobe is a bit worried about their position in the marketplace, and maybe they don't quite have the monopoly that people once thought that they did. Now, getting to a bull case, I'll pick revenue up a little bit to maybe 12%. I don't think I can give them much more than that. I could give them a slight expansion in operating margin. I think that that's fair. And then if I give them a 25 times multiple, you're looking at a 25% annualized return on this stock. This would be a triple over 5 years if our assumptions in this scenario come true. So, overall, I would say I like the stock. I've had a love-hate relationship with the company over the years. Not the stock. I've actually never owned Adobe stock. I think the risk reward is decent today. It certainly looks a lot better than many other companies I look at. But to be honest, I would like to buy it for cheaper. My base case for me, I probably wouldn't have a 20 times multiple. I'll put that back to 18. I think it looks okay. If you ignore the share-based compensation, it's going to look significantly cheaper, but taking that into account, I would like to buy this stock for under $300 a share probably. If it drops more, we might take another look. As always, this is not advice to buy or sell Adobe stock, just giving you my opinion. And to me, I think it looks decent. I would like to buy it for cheaper. So if you got value out of the video, subscribe to the channel. And if you agree or disagree with anything I said, leave that down in the comments below. And I hope to see you all in another video.